Okay, so what a week in the stock market. I got to say, I am very, very happy that I learned how to trade this summer, and I'm very happy that I got into the market. I'm telling you guys, if you have been considering investing or trading, you know, it's one of the hardest things I've ever tried to do, but it has absolutely been just absolutely rewarding in so many different ways, not just financially, but you know, the personal progress that I'm making, you know, learning about myself. And it's really just, I'm just so grateful and appreciative of the opportunities that are out there, right? So definitely ending this week grateful, ending this week with gratitude. Also ending this week for the 6th week in a row green in my day trading account. So this is now the 6th week that I've closed the week with more money than I had the week before. Now, this was a tough week to trade, or at least for me, it was a tough week. We kind of bobbed up and down, right? Let's just look at the SPY. We're going to talk about my plays on Apple, and then after we do that, we'll just look at some general news and just kind of talk about the market and long-term investing. But this is the SPY, right? You can tell. I mean, there's definitely a lot of volatility this week, but it was sort of, you know, down and up and down, and there was a lot of down days. And, you know, this is definitely a market correction. I don't think it's a full-blown crash or a bear market. I mean, there's going to be the eternal bears out there that, you know, are sort of frothing at the mouth, hoping that, you know, the markets just fail. But I think this is generally just a market correction. You know, and if you go to look at the history, even just the history of the past 6 months or the past year, the past 10 years, you know, market corrections are part of the game. It's not sustainable for the market to keep going up and away. It's got to pull back, right? We need breathers. But the SPY is, you know, it's a really great indicator because, especially if you're going to trade a stock like Apple or PayPal or, you know, Facebook, any of these kind of tech stocks, the SPY is a good indicator. So I usually follow it. I have it right here when I'm trading, like I have it in the corner. But in Apple literally drags the SPY either up or down. So, you know, when it comes to long-term investing, I definitely want to be in Apple. I was talking to somebody today who's buying up shares of Apple right now, actually selling other stock to buy Apple. And because Apple basically is the SPY, I mean, it literally can drag the SPY up or down. The SPY does whatever Apple does. We need to be in that long term, okay? But definitely a choppy market. There were some days where I took losses, but I kept the losses extremely small. Actually, I think this week I only had one day where I was actually in the negative. I was actually negative $1. I think it was Wednesday, or maybe it was Tuesday. It was like negative $1. Then on Thursday, I took some losses, but I was able to get most of it back, and I ended up like $3 up. But the point is that this week I did an extremely good job of keeping my losses small, right? Because that's the only way that the wins are going to outdo the losses. If you let the losses, if you bag hold, and I did this a lot, so I know from experience, if you bag hold and you let the losses grow into $100, $200, $300, $400 losses, you know, the wins are going to be very, very hard to overcome that. So this week, I do feel like I traded a lot less emotionally. I took the losses kind of just in stride. I got out of my bad trades very quickly. Now, that being said, there was a couple of trades that I got out a little bit too soon, right? I got sort of shaken out of the trade, got scared. Market makers were kind of, you know, making the stock go like that. And I got scared, jumped out, and the trade would have actually ended up working out for me. So I got to be careful not to get out too early and stuff. But, you know, I'm glad I stuck to my plan, kept my losses super small. I mean, I literally had one day where I was negative $1, right? So kept the losses very small. They, you know, it's part of the strategy. It's one of the harder parts of the strategy because, you know, human nature, you want to be right. Like the ego gets in a way, and it's very easy to end up bag holding. But, you know, I feel like I did a good job just sort of stepping up to the loss, admitting it to myself as a man, taking responsibility, as a trader, taking responsibility. I got out and I was able to let my winners run. Now, this week, all right, well, here's the P&L for today. All right, we're up 8%. Now, my account, I've been taking money out of my options trading account, so it's under $2,000. I mean, even after this, I put, I think, $600 into another account because I'm trying to get in on this market correction. And I'll talk about that towards the end where, the long-term investing, we got to have long-term portfolios, right? I mean, even if we want to day trade, we have to have long-term portfolios, dividend portfolios that are making money for us passively. That has to be part of the plan. But, today it was an 8% gain of what was in my account. And it was $143, right? You can see I took, let me go back to this. You can see I took 2 trades on Apple. These are actually in order from bottom to top. So the first trade was a $118 loss. I'm glad I got out where I did because, and I'll go through the play with you guys. I bought calls pretty much right at the open, which there were some signals telling me that, the chart, signals in the chart, not signals chats or anything or somebody else. The signals in the chart was sort of showing me maybe some bearish or some bullish momentum. But that quickly died out and I had to get out of the trade. So I lost, it was 2 calls. So I lost $50 on each one. But I was able to reverse that. I jumped into puts. And I was able to make, about $270. So I got back my $118 loss, plus some. So it turned out to actually be a profitable day. I feel bad too about that first trade because I actually got my brother into it. I'm going to show it to you guys, but he has enough money in his options trading account to trade, once a day, and I'm just sort of teaching him. I'm trying to show him how to do it, and he ended up taking about a $40 loss too. And so I feel kind of bad about that, but it is what it is. I'm going to help him make it up and stuff. But this week, I made about $300, right? It was actually about $300 exactly because I had the big win on Monday, which was about $100 and I think it was like $150, $160 on Monday. Tuesday, right? We didn't have stock market on Monday. Made $150 on Tuesday, made about $150 today. So that's about $300 because on Wednesday and Thursday, I kind of took, I was actually up $3 yesterday, but on Wednesday I took a loss, a $1 loss. And so really it was just Tuesday and Friday where I made all the money, but it's $300 up from the week before. And, of course, tracking all of this in a spreadsheet. I actually got all of my portfolios and accounts. I'm tracking them all in spreadsheets. I have now 6 brokerage accounts, this day trading account. I have Robinhood. I started another account on TD Ameritrade. So I have 2 accounts in TD Ameritrade. It'll be a little bit easier for me to, transfer money there and hold some positions. Like when I make money in the day trading account, I can easily throw it on TD Ameritrade. But I also have Allied Financial. I have WeBull, Robinhood. And on WeBull, I have 2 accounts, and Allied Financial, I have 2 accounts. I have IRAs too. So, just setting myself up because I'm going to want to try different things, and I'm going to want to sort of average into the market and kind of average into different sectors. And now that I have some income and I can make money day trading, I want to put that money to work for me. And so, I'll have a tech account, a speculative account. I'll have maybe a long-term options account. I'll have a dividend account. I'll have like a mutual fund account. So maybe a bonds account, that kind of stuff. So definitely going to diversify the wealth. Okay. So, let's go over the plays on Facebook and then we'll kind of talk about broader market stuff and the news and all that. So, here we go. Well, this is the SPY. Let me go back to Apple. Sorry. Okay, so here we go. All right, I'm just going to close this sidebar here. As you guys can see by the shaded blue area down below the chart, the price action, Apple is in a demand zone. Okay, so there's basically institutional. Let me explain the demand zone real quick. So the demand zone, I think I found this on a 4-hour chart. it's a period of consolidation, right? Sort of sideways movement where the stock isn't really going anywhere. It's a period of consolidation, which means there's an agreement on the price, right? For 1, 2, like almost 2 or 3 days, there was an agreement on price followed by a very strong move to the upside. All right. And as you can see, it was tested, right? And this is months ago. This is from back in, what's the date on here? Yeah, this is like August 6th, August 5th, 6th we're talking about. It was tested a couple of days later, and then Apple, went up higher. Now, fast forward to today, or this week, I should say, the last week or so, we got a strong move to the downside. So there's supply zones up there, right? Areas of consolidation followed by a movement to the downside. That would be a supply zone. But this demand zone held up very well, as you can see. 1, 2, 3 times on 3 separate days, we hit that demand zone, and there are institutional buy orders, right? And this is around $110 in this shaded blue area down here. There are institutional buy orders that are just sitting there waiting for the price to come down, and they get filled. That pushes the price back up. Only institutions can make the market move, move a lot in one direction or another. Now, I got this strategy from a guy called Carmine Rosado is his YouTube handle. And since I started utilizing this strategy, big shout out to Carmine and what he's doing on his channel, because since I started utilizing this strategy, it has been a game changer. I've been profitable for 6 weeks now since I started incorporating supply and demand zones into my trading. But if we go to, like, let's say the 1 hour chart here, right? So this is the past couple of days. You can see these bottoming tails, right? We got a huge bottoming tail on this candle. This is actually a 1 hour chart, but huge bottoming tail there, right? So the price was really supported. It did touch down almost to about $110. Like 110.84, and it was immediately supported, right? It did it again in pre-market a couple of days ago, or I'm sorry, after hours a couple of days ago, was immediately supported and even gapped up. And then today, we actually touched down not once, not twice, but I believe 3 times. So this is the 5-day, 5-minute chart, but this is today right here. And this is the move right here. Bam! Instantly supported, right? It did come down again, 1 and then 2, right? So this is a key area of support, the $110, right? It's a demand zone. And so is it possible that we break this zone? Yes, it is. If we run out of buy orders, if the institutions, if they either remove their buy orders or the buy orders get filled and there's still more sellers than there are buyers after that point, the price will go even further. Now, the lowest I think Apple will go, in my personal opinion, and I'm not saying it's going to happen, but the lowest I think it could go is this next demand zone that I have charted right around the $100 mark. It's about $100 to $101, okay? And as you can see, there was, a period of consolidation followed by a move to the upside, and it's at that key, like, sort of psychological price level of about $100. So it makes perfect sense. So consolidation, chop, followed by a move to the upside. That has not been tested yet. All right. And it will be tested and it will be supported if we break below about the $110 demand zone. Okay. But again, I don't think that's going to happen. I think Monday we could dip down into 109. But I think we're going to be supported. Maybe it happens in after hours. Maybe it happens in pre-market on Monday. I don't think we're going to go much lower. I think we're at the bottom for Apple, okay? And I'm buying shares. I just transferred another like $600 to my one of my long-term investing accounts. And on Monday, I'm going to try to scoop up as much Apple as I can afford. But if you have the capital, right, now is probably a better time than any to buy into Apple. And we can talk about that, later or in another video. So anyways, going back to my plays, the first play was on calls, all right? It was kind of a dumb move because we did just reject. If you see, there's a supply zone above, right? The shaded area. We rejected in pre-market, right? There was obvious rejection at that price level. And we had a lot of selling pressure from the day before, right? There was a, there was kind of an update on Wednesday, but Thursday was down. And during the pre-market this morning, we didn't even retrace back up to 50%, right? It was probably more like a 40% retracement from those, from the low, the high to the low on Thursday. And everything. I mean, you had the moving average was headed down. It was headed down on the 15-minute chart too. But I thought, at about 114.50, I really thought we were going to go up. We had a rally last Friday, and this was a bad call on my part. So I jumped in 2 calls pretty much right at the open, right? I think it was like the 931 candle. I jumped in 2 calls because if you look on the 1-minute chart, which I think I was actually reading right at the open, on the 1-minute chart, we had, a couple of bottoming tails. And so, I jumped in thinking we were going to go up. And I feel bad about this because I also got my brother involved in this trade, and he ended up taking about, a small $40 loss. I lost about 50 on both contracts. So altogether it was like $100 loss. I didn't let it bother me, right? I didn't let it stop me from making money today. And so I almost instantly realized my mistake, right? We had all these topping tails. The price was going lower. Price on the SPY was going lower. Going back to the 5-minute chart, okay, I then jumped in puts, all right? I jumped in puts at I scaled into it about 936 to 940. Now, I was a little bit early, okay? I was a little bit early on my entry because I got in on, let's say, it was probably between this green candle and this red candle. It was kind of aggressive. I should have waited probably until this red candle unfolded, but that's in hindsight because it did sort of start to turn against me a little bit. I did not get scared because we had indicators like the moving average, like the fact that we got rejected in pre-market at this supply zone right here, right? I had a lot of things. It was under VWAP, which I watch on, I watch the VWAP on WeBull, okay, because I don't like to clutter up this chart. I do have other indicators that I glance at sometimes when I have WeBull open during my trading. The first trade was just a mistake. I should have known that buying calls today was absolutely the worst idea, and so I was able to fix that mistake. I did get on puts, got in a little bit early, but I got in right about here, between like 936 and 940. Bought 3 contracts because I knew I had to try to make up for the $100 loss to actually get some profit today. Should have bought 4, should have bought 5. All right. But, you don't want to ever put in half of your capital or even 25% of your capital into one trade. Not a good idea. Has never really in the long run turned out good for me. So I'm telling you from experience. So I got in on this candle and I knew that we had this demand zone, right? Because the demand zone's on my chart. So I knew to hold. That was my target, was demand. Okay. And that's exactly what Apple did. It fell into demand. Now, this green candle with the very long bottoming tail on it, that used to be a red candle. That was a very red. I mean, I thought it was going to be a red engulfing candle. It was quickly supported, right? That's what I'm trying to explain to you with the demand zones. There are institutional buy orders here. As soon as the price went down, let's look at it on the 1-minute chart. This took maybe a couple of seconds, right? Because this is a 1-minute candle here. It came all the way down, touched into the $110 area, was immediately supported and pushed back up. All right. And I sold down here somewhere, probably about at 110, maybe a little bit over that. So I made about $267 on that trade, right? So I made up for my $118 loss plus some. So I walked away with like $140 profit. All right. And that's including my option fee or commissions, whatever you want to call it. And then I walked away, right? Because I was up $300 on the week, because I had another 150 win on Tuesday, and I walked away. Was it hard? Yeah. Like I saw the support here. I was thinking, yeah, maybe I should try to get some calls. But I've been over trading, right? That's why I didn't make more than 300 this week, because I over traded on Thursday. Wednesday I didn't really over trade, but I shouldn't have traded, right? I need to get better at not taking a trade, right? I don't have to take a trade every day. If the market is choppy, if the market isn't giving me clear signals one way or the other, why should I? If I'm risking just losing money for very small upside or very low probability of upside, right? I got to get better at that personally. So today I didn't make that mistake. I was like, psychologically, I was just very strong. I was grateful. I was like, hey, I made $150. A lot of people can't make that in a day. A lot of people certainly can't make that in 20 minutes trading stocks. So I took my profit and just sort of focused on my long-term portfolios and stuff, and just I sort of watched the market or whatever. But that was my play, right? That was my play on Apple, and I think I'm going to stick with Apple, because Apple soon enough is going to have a huge movement to the upside, right? We're going to go back into bullish momentum, bullish upward trajectory, and I want to be there for that, right? Not only do I want to be there with investing and actually owning shares, but I'm going to play the absolute out of call options when that time comes. And focusing on one stock, I think is better than, like, I see guys on YouTube, some of them lose a lot of money because, in my opinion, they're trading, especially beginner traders, they're trading way too much, right? They're looking at too much. You gotta, in my opinion, I've done better. Remember that week I was trading only Facebook? I made like $600 that week, right? I really do think trading one stock, and you can switch it up. It's not that I have to trade Apple for 6 months, right? But I think for the next week or so, I'm really going to focus on Apple. I'll have a backup like Facebook, PayPal, but Apple is my main stock. I plan on making a lot of money off of it, and I really want to become intimate with Apple and its movements and its, its supply and demand, and just the behavior of the stock, the behavior of the people trading the stock. You really can sort of get to know a stock if you're following it every day and trading it every day. And that, I think, is going to make me money, as opposed to, watching the whole market and trying to be on top of every opportunity when it comes. It's just, it seems kind of crazy to me. So I'll have to map this. I don't see any supply or demand that, I don't already have mapped out. But, you could say we're kind of in a period of consolidation at this point, because we're just sort of bobbing up and down. So I do think we will probably go up from here. It might go up and come back down to the 110 mark. I don't believe it's going to go much lower than 110. If it does, it goes to 100. Okay. But either way, I'll be trading it. And let's just look at the daily for Apple, just to kind of keep things in context. This is a market correction, right? It's a very big market correction, but I don't think it's a full-blown crash, right? If we drop down here to, let's say, 100, and then we drop down into like $90 and stuff, then maybe you could say we're in a bearish territory. But right now, I think we're still good. I think Apple, even if Apple does crash and go down to 90, better yet, right? We can buy it cheaper. We can buy more of it. Apple's going to be here for years to come. Apple is probably going to make other industries and sectors completely obsolete. They're going to build smart grids and smart cities, and we want to be a part of that. We want our money to be in that and to be making money for us. So that being said, okay, that's my day trading, experience today and this week. We got a couple more minutes here. That being said, hopefully this isn't lagging too bad. Let's just look at a couple of news items, and then I want to talk about long-term investments and portfolios. So here's an opinion, right? The number one big change in the market means higher stock prices are likely over for the next few weeks. Short-term market timers are bearish, and that's bullish for the rest of us. I'm reading this to you because the mainstream media is not in the business of helping us make money. They say a lot of things that in the past have really thrown me off, right? They'll say things like, oh, stocks open higher today, when every single stock I'm following opened lower, right? The mainstream media does this all the time. Is it possible that stock prices for the next few weeks will be, down? Yes, that's definitely possible. But a lot of the times when you see this kind of stuff, it's clickbait. They're getting ad dollars every time we click on these articles. So just be aware of that, right? I even saw an article today about, how bad from the Motley Fool, I think, how bad ExxonMobil was. ExxonMobil is going to cut its dividend and just all this doom and gloom. I bought some ExxonMobil. I think ExxonMobil is going to recover, and I think it's at a pretty good price at this point. We're almost down to the March lows. So I did buy some shares of ExxonMobil. Here's from CNBC what happened to the stock market on Friday. The Dow Jones Industrial Average actually rose 131 points. But tech did fall, right? I mean, PayPal. Look at PayPal. Let me show you PayPal. In hindsight, right? Making money on PayPal today with puts. You could have made a lot of money last 2 days, right? You could have bought puts yesterday, held them to today, and you would have been like $1,000 So, that's PayPal. But just in general, right? Tech definitely fell, but it's not the end of the world. Apple fell 7% this week. So what happens next? They say Lenmar, I don't know that company, is set to report earnings on Monday. The Fed will hold its last monetary policy meeting before the election next week. We need to start paying attention to, that's what I'm doing, right? I'll keep it on the eye. I am trying to pay attention to the broader economy, the broader, news cycle, like what's going on with the Fed, what's going on with politics, right? You want to be aware of all of this, be aware of the company news. McDonald's putting out the Travis Scott burger, I think. Just all this kind of stuff is going to make us more aware of the markets and make us better traders and investors. So we'll definitely keep this segment in my videos. Now, let's talk about long-term investing. So, I might actually bring my... let me actually bring this back up here. With long-term investing, right? I'm going to make myself really big. Here, is that cool? There, that's good enough, I think. I have several portfolios that I am now building. I have a portfolio on WeBull. That's going to be my growth stock portfolio. So things like EV, electric vehicles. I want to be in on that, right? We have an opportunity to get into the electric vehicle market. I'm going to start squirreling away money every chance I can, right? But buy a $20 share of Workhorse or Neo or, that kind of stuff. I also bought Upwork, and I'm looking to get Dropbox. These are like cloud services, or Upwork is like a jobs app, right, where people can post openings for jobs or work that they need done. This kind of stuff I want to be in on. That's WeBull. Robinhood is a dividend portfolio. Plus, it's just some liquidity for me because I have a card. It's basically like a bank. So I'm going to keep cash on Robinhood, but I will also be buying dividend stocks. I've bought some ExxonMobil, some AT&T, Siri. I really like SiriusXM. They basically have a monopoly over the satellite radio industry. They're buying things like, I think they have a stake in SoundCloud, and they're buying Stitcher. So SiriusXM, very stable stock, pays a small dividend. The share price is small. So, I'm going to, probably park some of my money in Siri as well, just to have it invested and have it, making me a dividend. And, it's a very stable stock. That's what I'm going to do with Robinhood. Then I have Ally Financial. I have a regular investing account, and I have an IRA that I've started. Now, I haven't started investing in the IRA yet, but in the regular investing account, I have a couple shares of Apple, some ExxonMobil. I think I have 3 shares of ExxonMobil, a couple shares of AT&T, and Siri. right? So Robinhood and Ally Financial, they're going to be similar, but I'll probably have a couple of stocks on Robinhood that I don't have on Ally Financial, and I can sort of experiment, right? I can experiment with different sectors, different types of dividends, maybe REITs. Maybe I'll save Ally Financial for REITs or ETFs, mutual funds, that kind of stuff. And then I have the TD Ameritrade account. I have my main account, and then I start the day trading options account. And then today I started another account that I will slowly start investing in. So I have 2 accounts in Ally, Robinhood, WeBull, 2 accounts on TD Ameritrade. So I have like 7 brokerage accounts that I will start investing in. Okay. And that is definitely part of the plan. Like, I love the day trading, but long-term investing has to be part of the plan. All right. That just having the money work for me, having the dividends come in, I'm going to get rich doing this. I know I am. All right. I am going to become very wealthy doing this. And I'm enjoying the come up. I am. And I'm trying to be patient. I'm trying to be humble, but I believe in myself. And I really believe that this is the only way. A part of me wishes that I had discovered this sooner, or figured this out sooner, or just thought of this sooner. But I am telling you guys, if you had asked me a year ago, or told me a year ago, that I would be trading stocks, and I probably wouldn't have believed it, because it's just not my world, I mean, I guess my parents might have had like 401ks, and stuff, but I just, I didn't grow up very financially literate, and they didn't teach me this shit in school. So, I got to learn it now, but I'm enjoying the process. I am making money. I've closed green now for the 6th week in a row in my options trading account. And now I'm rebuilding my portfolios, right? I sort of liquidated the small portfolios I had on Thursday and Friday. And now I'm rebuilding this week and into next week. And I guess the last thing I'll say is open up a brokerage account and put cash on it, right? Even if you don't put it into the market yet, just start putting cash onto a brokerage account and wait for these opportunities. This is the opportunity, with this market correction. There will be another one and another one after that. I think I was a little too hasty when I got into stocks, right? I just wanted to start buying them, and I did buy, I started a portfolio on Robinhood, back like in late March, and I made some money. I made about $200 on my first little investment portfolio before I liquidated it. But I'm in this for the long haul, and I realize the importance of having long-term positions, especially in stocks like Apple. All right. So, that's one thing I could say is, even if you don't invest, open up a brokerage account and just put cash on it, and just sort of wait on the sidelines. Start a watch list. Just follow 3 of your favorite stocks, right? Just get involved. If you have to, buy 10 shares of something just so that you're involved. I swear, like, this is changing my life. And I can't even imagine how much better my life is going to be because I'm becoming financially literate and investing money, and now making money from the stock market. So if you do want to open up a brokerage account, use the links down below. If you're interested in WeBull or Robinhood, you'll get free stock. I'll get free stock. It's a pretty sweet deal. But if not, like I said, just open the brokerage account. Open it anywhere. TD Ameritrade, Fidelity, there's a lot of them. For people overseas, I know Interactive Brokers is an international brokerage platform. Very low fees, if any. I don't think there's any commission, and very low fees for options trading. So if you're international or in the UK or Australia or something, Interactive Brokers, that's where I would recommend. I have an account there. I just haven't put any money on it. And with that, follow me on social media. The links for everything are in the description below. If you enjoyed this video, please do give it a big fat like. Comment down below, where are you putting your money? Always enjoy hearing back from you guys. And as always, this is CMC Broadcasting. I'll see you next time. God bless.